Good afternoon. Allow me to explain the VAT and under taxation. All right. So in front of me is an already worked out example, because VAT really doesn't involve a lot of things. So I thought of making it this brief. But attached to this video, I'm going to attach the actual question where I was getting these figures. For now, I just want to explain how these figures, how the VAT was calculated on these figures. So the VAT rate, the value added tax rate, will be given in the question. What rate are you supposed to use? Okay. So VAT, we know that it's on two. There's two types of VAT. There's input VAT, as you can see in my working out. There's input VAT, and there's also output VAT. So when you are given a question, you are going to answer it in this way, whereby you start with the output VAT first of all, which is the VAT charged on sales. On you yourself, if you yourself you are making sales, any sale that you make, if you are VAT registered, you'll be required to charge your customers the VAT, which is 16%. The rate is given by the government depending on different countries. Okay, so you'll be charging, the customers will be paying you inclusive this VAT amount. So the question that I have, the person made sales amounting to 2 million. Sales amounting to 2 million. So you need to calculate the VAT on that 2 million. So these figures we are VAT exclusive. Exclusive means the VAT wasn't included in these amounts that I have in the question. If the amounts are VAT inclusive, the question is going to state. But if it's VAT exclusive, you just multiply direct the sale amount that you made, which is exclusive. This sale amount doesn't include the VAT. So we'll just multiply directly with the VAT rate to know how much VAT was charged on those sales of 2 million. So that's the figure for VAT. You do the rest. So this person also had sales returns, all right? Customers returned goods worth 100,000 kwacha. So you need to calculate also the VAT on the sales returns. But what's going to happen since they returned? You need to subtract the result of your calculation there, because these sales were returned. This is the figure here in brackets indicating we are subtracting it from the VAT which we charged. This is the same as deducting the 100,000 from 2 million. You can do it in advance that way if you want, but here in this question I chose to do it separate, and this is how you put it there. And then the other sale which was made was a sale of furniture amounting 35,000 kwacha. So I've explained, you multiply direct. This is the VAT which was charged. So we find that the VAT charged on the output, the sales that we made, amounted this amount, came to this amount. Okay. Then the second part you need to work out is the input VAT tax. The input VAT tax, this tax, if you are registered, if you are VAT registered, it's claimable. You need to claim back from the tax authorities, and then they give you back. So you deduct it from the VAT output. If it's more than the input, then if the output is more than the input, then you are going to deduct and pay less. If the input VAT input is more than the output, it means you have something to claim. You have the tax authorities are actually owing you. But let's focus on the example here. So the input VAT, we have purchases that we bought for 476,000. Then we are deducting 76,000 kwacha because this amount was bought, this item was bought from a supplier who is not VAT registered. Okay, so on business entertainment here, these are like expenses. You can't claim any VAT on the business entertainment. That's why we have 0 here. So you are required to indicate those transactions where the claim is 0 or where the charge is 0. You still need to indicate. You don't leave out such transactions from your calculations. Irrecoverable debts, we had 2 types, which is 15,000 plus 23,000 kwacha. These figures, you need to add them. These are the debts we failed to recover from our clients. You still calculate the claimable 16% input tax. And the staff refreshments as well, you are not allowed to claim anything, so no calculations are made. It's a 0. Other revenue expenses. Revenue expenses, meaning these expenses are bringing in revenue to your business. Those expenses you are allowed to claim if you are VAT registered. So on those expenses, we are calculating the VAT, which is this figure. And then on the motor car, this motor car wasn't used for business, so you are not allowed to claim anything on that motor car. And then the other one is office equipment. Office equipment was bought at this amount. You can actually claim the input tax on the office equipment. So these figures were tax inclusive. When the amount is tax inclusive, it's assumed it's 100% plus the tax rate. So this amount is at 116%. 16% is the tax rate. So you have to calculate it like this. You put 16 on top over 116 because this amount is assumed to be at 116 because it is already inclusive with the tax. So that's how you calculate that figure and then find the total of the claimable, which is less than the payables, the tax payable, the tax chargeable, the one you were charging. So you do the subtraction from that amount of the output tax. You are going to find the tax payable at the end. The tax payable at the end. So this is how you do your calculations. If you have you face any challenges, feel free to ask me. I'll be able to explain. And pause the video as you be going through so that you read the question nicely and understand how to go about it. Thank you very much.